What's going on, Paula?
What's going on, Jimmy? It's so nice to see you. I love this studio.
Thank you. Welcome to Let's Talk About It.
Thank you. Look at this beautiful
I
logo.
appreciate it. Obviously some time went into it, but I'm happy I got it right.
Yes, you did. Absolutely. I love the branding for sure.
Thank you. Thank
Beautiful.
you so much. So Paula Goosehead, who are you?
Well, technically on Instagram, I'm Goosehead Paula, and
Right.
it's very, that's not original because I think there are a lot of other Goosehead insurance agency owners that have like a Goosehead and then name. But I feel like I embody that because that's really who I am now. I started this industry, I'm started in this industry several years ago. I opened the insurance agency, this brokerage in 2021, and I met you shortly after.
Correct.
And our brokerage is a nationwide property casualty brokerage, publicly traded, based in Dallas.
Okay.
And my insurance agency, my own little franchise, is licensed for New York and New Jersey with the ability to do insurance policies, property casualty all over the country because we have all of our other partners.
Why gotta be little?
We're not, well,
I'm saying you're doing really well. I mean, from inception when you started to now, I would say like you've grown your business a lot. So I wouldn't call it little anymore. You got to give yourself a little bit more behind the scenes. You did a lot of work to get to, I would consider mid-size going to big. So
I'd say
give
I'm in
yourself
my sophomore year. I'd say I'm in my sophomore year for sure.
Okay.
The next step is hopefully to grow the agency, maybe get some producers on board. We'll see.
Maybe.
See how that goes.
Oh, you will.
We will.
Okay,
we will.
that's
We
good.
will. I know.
Positive
It's
mindset. You gotta
language.
put-
Language.
Yeah, right.
We will. We will.
You get affirmation, right? You got to put it out there. It's important. It's very important. All right. So, I think I wanted to bring you on because I think today some overlook insurance when it comes to mortgages, right? What used to be the past, what we discussed earlier behind the scenes, like the one-liner, your insurance is going to be $80, $90 a month now. That's just not the case.
Nope.
Mother Nature has changed that course.
100%.
Right. And I feel like it's important for you to let my audience and others around my audience, of course, know about how important insurance is today. And that is a determining factor of either you can afford something or you can't anymore, right? Because of given the complexity of what property, casualties, and some insurance companies leaving or some not insuring the same amount of that property anymore, where there's a certain coverage that we need for as a lender to make sure that we're getting what we need if something goes wrong with the property,
Right.
or to replacement costs, not go wrong with property. Something happens to the property, damages, and then we have to go ahead and fill in with what you guys with the replacement costs
Right,
on that property. So
exactly. It gets difficult.
it gets very difficult. So I wanted you to talk more about what have you seen and what should one look for potential buyers or even those who are looking for insurance now who have it or renewals every 6 months, right?
100%.
What to look for and how the dynamics have changed with Mother Nature and how insurance have post-pandemic increased their fees.
Yeah, I mean, you've definitely hit on a lot of topics there. So I'm gonna try to peel the onion
Thank
and
you,
maybe
thank you.
So insurance has definitely changed. Car insurance and home insurance is a completely different animal than it was 2-3 years ago, and it's not necessarily related to the pandemic.
Okay, I'm wrong on that. Okay.
No, you're not. I'm just saying it was changing before the pandemic, and
was
I think
changing,
it
okay.
definitely, for sure, the rates have always been going up. Inflation, the usual stuff, the
Right.
usual suspects, inflation, economy, et cetera. But then things have started to change, and what's really put the gas pedal on the home insurance portion of it is the weather, like you had mentioned earlier.
Right.
The National Oceanic Atmospheric Association, NOAA. I try to say all the letters because if I just say NOAA, no one
That's
knows
good
what
on
it
your
means.
behalf.
NOAA
Okay.
recorded 23 catastrophic weather-related situations in 2023 from January to September. So in 9 months, 23 weather-related catastrophes. And what that really means is that if you think about it, it's not just the weather, it's not just the news, it's also home insurance, right? So if you're talking about 23 situations where you've got wind damage, you've got water damage, you've got down power lines, sewers being overflowed because there's too much water going back into your house, it just means that the insurance companies are paying even more and more to manage their book of business than they were in the past. So things have really accelerated, like what we were saying. So it's an easy thing for everyone to sit there and say, "Gosh, things are just so expensive now. It's unfair." But the bottom line is, like, the weather. We can't control the weather.
No.
The issue with insurance companies too is that they are financial companies, just like anything else.
And the profit of making money.
Right. The bottom line is that insurance is there to help you as a homeowner, and it's to it's to be there in the case of to make you whole if there's something happens, right?
Right.
Your house burns down, God forbid. Kids are cooking eggs and they singe the kitchen area. Whatever it is, you want to be able to put your home back to where it was before whatever happens, right? Life happens.
Right.
But the bottom line is, on the other end of that, the insurance companies are businesses, like what you were just saying, and they're looking to make sure that they are also financially strong. Because if they run out of money to pay for all of the catastrophes that are happening, then somebody's going to get left out. So that's why the premiums go up, because they got to collect enough money to pay for all of the other issues that are happening to the many, many, many homeowners that they have, not just you. Right. And so you do see the rise in premiums in both car and home. Now, I know we're here to talk about home insurance, but the bottom line is in the auto industry too, when you think of all of the storms we've been having, like the 3 days of rain, right? For instance, in the New York area, New Jersey area, you see, it's not uncommon for us now to see cars that get flooded out in the street.
Right.
They're like on the side of the road. The driver got stuck in a rainstorm, and then the car is inoperable. They have to leave it on the side of the road. So if you're looking at the house and the car, you have a house and a car.
Right.
You've got this insurance company is dealing with paying for getting you a new car, your actual cash value on your car, and also to replace your whatever it is, your sewer, your roof, whatever. So there's a lot of money going out there. And for a little while there, I think it's still like this, but the loss ratio in the insurance industry was hovering around 60%. So every single dollar they were making, they were losing 60 cents.
Wow.
And so that's not sustainable unless you raise your premiums so that you can lower that loss ratio, you can bring in more money, and then you can offset some of those losses.
What was an eye opener to me, right? My wife's car, we were going out for New Year's, and the mirror, someone hit and run. Hit my wife's side mirror, and I'm old school, right? I'm like, man, let me just go to the junkyard. Let me just go find a thing. Go paint
duct tape it.
Dump it, like, wrap it around.
Get a staple gun.
Put it there. Be like, yo, good. And then then give it to my wife. And then obviously she was like, you must be mad. Like you wouldn't do that to your car, so why are you gonna do it to my car? So that was a little back and forth, right? But
nail polish.
yeah, I'm just saying that was my mindset, and then so. I'm like, all right, got to get this mirror. I'm like, all right, cool, not a big deal. I go to the auto collision thing. Guy was like, yo, $3,000. I was like, what? $3,000 for a mirror?
Yep.
I'm like, I'm from the era of $500 to $600. You could take you anywhere, and then get your man to hook you up, and then paint it. You good. $3,000. And I'm like, okay, yeah. So the mirror has sensors, the mirror has blind spot, the mirror has a color, the mirror has another mirror inside the mirror, and then someone has to put it, and then you have to put the labor. And I'm like, now I see why insurance is expensive.
That goes exactly.
That component,
labor,
it just
technology, houses too.
Right. And I'm like, wow. And I'm like, okay, yeah, this is insurance is it's expensive now. It's not the same back in the day where you used to just it'd be a couple thousand call a day. You have to factor in the cost of insurance now. Yes. It's very important to factor that cost.
Well, the other thing too is that loan officers. There's younger loan officers that are newer to the industry after all of this was happening, and there's the ones that are seasoned, like yourself. Right. And so the way that the old way of doing things was just you'd go on Zillow, and on the Zillow page, you're going to see the price of the house, and then you see taxes. If it's in a townhouse community,
which is wrong anyway, by the way. Right?
It's usually wrong. Then you have the insurance, and the insurance is almost always too low because it's based on whatever. I don't know what it's based on. I'm not sure who writes those numbers down, but they're almost always wrong. And one of the reasons, the easy thing to point out is because they're actually basing that on the person who's selling the house. They bought the house 25 years ago. Right. Their insurance is really low because they're underinsured, right? So the value. So they bought the house in 1988, just throwing a number out there. And back then the house, materials and labor and the cost of the house was much less. So they put that number in there because the guy's like, oh, I only pay $80 for insurance, and so they put $80 in there. But today, with the way that the labor cost is and the things have changed and how materials have changed in the market, While you're not insuring on the market value, you're still got to remember that that house is going to cost more to replace now because there's been improvements. Maybe they bought the house with 2 bathrooms and now it has 3.5.
Right.
They didn't have a deck, now they have one. Whatever it is. And so in order to insure that more house, you're going to have to pay more money because your replacement cost is a little bit higher.
Yeah, that's you right, because today, back 10 years ago, you used to replace the kitchen, it'd be like $20,000.
Right.
Now, if you're doing a kitchen, it's like almost $50,000, $60,000. So
Yeah.
obviously, if something goes wrong where your house is flooded and your kitchen is destroyed, insurance has to make up that difference.
Yeah, who's paying the $60,000?
Who's paying the $60,000? Insurances. So that means your premium is going to have to go up.
You might have gotten ripped off on that $60,000, but we won't talk about that right
now. Maybe. All right. That said, and also too, what I didn't know, right? Doing some extensive research on, not research, but knowing what's going on with insurance. Like claims follow you and claims follow the house.
So that is a really,
that's
a really good thing to bring up because I've been battling that out this week. It's been like the week of claims. And so you're right about that. So you're going to deal with a client. Somebody walks into Jimmy and Joseph's office and they're like, I want to buy this house. Let's all get your money in order. And then it turns out, whatever part in the process you're like, okay, you've been pre-approved, go out and get your insurance. And they go out there and then the insurance agent on the other end of the line is me. And then I pull the data from the house that they're trying to buy. And also, it's a soft pull. It's not a hard credit pull, but it's like, this person lived at X so-and-so address in the last 5 years. So the claims report is going to come up for the house that they're buying. And also if they've made a bunch of claims on your other houses, let's say 2 houses burned down.
Yeah.
Looks a little weird. So,
weird.
now we're trying to insure this person who had 2 houses burned down. This happened one time, by the way. This is a real example. They had 2 houses burned down. They're looking to buy another house. And so there was no insurance company in the standard market that would be willing to take this particular client because they had 2 houses burned down in their past.
Wow.
So the good thing on the flip side is that, as a broker, there's brokers and there's agents in the insurance industry, right? So there's agents that you call up the insurance agency, like a brand, and you speak to somebody there, and they are responsible for representing that brand only, not you as the client, but their brand.
Correct.
So they're going to sell you what they have. Brokers, like me and everybody else at Goosehead, we're brokers, and so we have access to all of the brands and also excess and surplus line carriers, which are not the standard ones that you see on TV necessarily. They don't necessarily pay for commercials, pay for marketing, so you may not have access to them because you wouldn't know how to call them.
Right.
There's some more nuances in there too, but it's a little bit more technical. But anyway, so we can find a person like that insurance. It will be maybe not the guy with the 2 fires because that's a really difficult one. But yes, it'll be more costly because you are a more expensive risk. Right. You are a risk. When you're buying a house and you're looking to be an insured person or insured homeowner, you're a risk, right? So what's the risk on this person? They have no claims. They've been a previous homeowner. They're buying this house. It's in great shape. It's young. There doesn't seem to be any problems. There's no trees around the house.
Right.
The history of this zip code. So that's important. The history of the zip code is that there's not that many claims. So this is a low risk. We'll price it accordingly. Or it could be the person with maybe no claims on themselves, and maybe there's no claims on this house, but all around that zip code, in that little 4-block radius, there have been many, many water backup claims. Lots of trees have crashed into all of the roofs. Maybe not this house, but in this area, there seems to be a lot of claim history. And that's also going into the premium. So when you compare the 2 examples that I just gave you, this person with the many, many trees and the many, many claims buying that house is going to have a higher premium.
This exactly what happened to me. My neighbor, we're good. Trust me, we're friends. We get along.
We have to get along. Everybody loves Jimmy.
His tree fell on my house.
Yeah, and it's his insurance.
No.
It had to be yours.
It was my insurance. My insurance company was like, yep. I was like, but that's his tree. They were like, yeah, it's going to go to your claim. Okay. I was like, okay, this is what we're doing. And it was a couple of thousands of dollars, right? But
now you have a claim.
Now I have a claim on my house. And again, it's Mother Nature, right? Like I said, I love my neighbors. We're cool, like that. But it's just how insurance is doing things these days, right? Mother Nature, what's actually happening, with the flooding, water tables coming up, basements getting flooded, people putting in claims back and forth, and then you got shortages with electricity. I would make the case today, seriously, as soon as you finish your inspection with your property, call your insurance provider to let that he or she know when things would change when things happen so that you can get the accurate information on insuring this home. Because I promise you, they're gonna drop you, you're gonna have a bigger problem. Now you're gonna be like, why didn't I do this in the beginning? I shouldn't have waited to the last minute. No more waiting to the last minute when it comes to insurance. I'm telling all my clients that today, you're doing your inspection, call your insurance provider. Of course, I know who to go to, Paula, right? But get that information, because the professional you are, you're gonna ask questions because pertaining to the life of whatever is in that property: roof, panels, flooring, doors, garage. Like, so many different factors can change the price of that insurance.
Well, here's a technical thing with insurance and how to get insurance, and how to approach it from our end of the business, because we're on behind the scenes, and the homeowners they're on the they're in the trenches trying to buy the house.
Right.
So the bottom line is that the insurance companies in the entire country, they have been battling serious claims. We've just talked about that, right? And there are some areas of the country that have battled, way worse than people in New Jersey, Florida,
Right.
California, Colorado, Hawaii, all of those areas. And there's a lot of areas in those states that are almost uninsurable now because they can't. There's many reasons, and one of them is that some of the places, for instance, Florida, where people own their house outright, so they didn't carry the insurance, and when they did have a problem, they lost their whole house. So that's all bad and terrible too.
They still don't have insurance, people who paid off their house, because it's so expensive.
It's very expensive, right? So you're talking about the nation as a whole. The insurance rates have been going up for a number of reasons: weather patterns, people who are underinsured that then make a claim, et cetera, et cetera. So it's all that stuff. And then what the insurance companies do on the standard market is they go to the Department of Banking and Insurance in the state, and they ask for a rate change. And they say, you know what, in order for us to be able to handle all of our clients in this area, we have to raise everybody's rate by 30%. Let's say 30%. Let's just put it out there. 30% sounds like a lot. Right. It is a lot.
It is a lot.
But 30%. And then if they're being told no, if the state says, Department of Banking and Insurance says, no, you cannot do 30%, that is way too much for this area, then what they'll do is they'll just close off that market. So then you'll have insurance companies that are like, we're not going to insure this zip code, half of the state, whatever, draw the lines. We're not insuring these areas. We're not going to do. Union County is a good example. Union and Hudson County are two areas that we have trouble sometimes getting carriers to be okay with some of our houses for a variety of reasons. So now we don't have as much choice. So that client is now going to go into the market with a broker, hopefully, and realize that very quickly that they don't have as many choices. They're not picking from 10 different carriers. They're picking from like one or two,
right?
Maybe if you're lucky. And because they're picking from one or two, then they got to worry about the insurance rates that might be a little bit higher than what they're expecting. So then you've got the DTI issue. Right. And so they can't close on their house because their insurance rate is going to be too high, or they'll have to take a really high deductible. And that's what some of the insurance companies are doing now anyway. They're requiring a higher deductible because they realize that everybody in this area is going to probably 90% of the houses in this area are going to probably have a water claim because the sewer lines are old, or whatever it might be. We're heading into a very rainy season. So everybody in this area has to have, we're not taking your business unless you take a $2,500 deductible, which used to be really high. People would balk. They'd be like, clutch their pearls and be like, $2,500, that's a lot. But now $2,500 is like, you approach that and you say, $2,500 is actually not that bad, right? I'm not going to call unless if I'm going to get a check back. If my claim is $2,700,
you got to make a decision.
I'm not calling for the $200 because it's just going to raise my premium.
Correct.
So there's like some things in there that you got to consider as a homeowner, and how we're advising our clients is, you got to look at the entire picture. Do you want, you want this house, obviously we're going to make it work, but you got to take the higher deductible, and these are your choices. So it's always good to just speak to a broker that has choices for you, so that you know kind of what's out there and what's on your policy.
Paula Goosehead.
Goosehead Paula. Goosehead Paula. Me, guys, me, call me.
All good. That's it. So let's make it a little bit fun, man. Right? We talked about insurance. We could talk about this for like 2 hours.
All day long.
Honestly, we can.
We have. You and I have. We've been in the car driving. We've been like, oh my God, can you believe whatever.
And you're gonna come back on again, right? Because I don't want to give too much information. Right? Yeah,
I'm invited again. I love it.
Because insurance is so important. I think it's a dedicated thing that you need to have, because it's like, again, most people overlook this thing, and I don't think
it's easy to overlook.
Right.
Well, think about it, right? If you're buying a house, what do you want to talk about? You don't want to talk about the insurance. You want to talk about the new couch I'm going to get, or what am I going to do in the flower beds, or honey, should we paint the house blue or white? Like that's what you really want to talk about. You don't want to talk about the insurance. But the bottom line is, the insurance is there for your peace of mind, right? You want to make sure that if anything were to happen, it's for when the SHIT hits the fan that your insurance is there for you.
Exactly.
So that's what it's there for. Nobody's talking about it. It's not a sexy topic because
No.
when you're talking about your insurance, it either means that you're buying the house, you need the insurance, or something happened.
Nothing.
You would much rather never talk about it because nothing ever happened. And that is
why
my
would
wish.
you-
I hope nothing happens.
But if there is, I want to make sure you're properly covered.
Right.
Right?
Right.
That's a good way to look
Your
at it. Right?
deductibles, okay, that you can handle the deductible, that you have enough coverage. You're not insuring a house that's worth $500,000 to rebuild at $300,000. So if you burn the whole house down, you're at short $200,000.
Right.
You don't want any of that. You don't want any part of that.
Let's go back old school when you and I first started. We did the YouTube thing.
Yeah.
You know, we used to say
That was fun.
say this 3 times, say this, a couple of times. And what was your favorite restaurant? So I'm gonna steal from what we did. What is your favorite restaurant?
Where?
That's a good question.
Jersey City. I live in Jersey City.
Right. So, all right, let's say Jersey City then.
So I live in Jersey City. I've been living there for 20 years. You and I just had a conversation in the green room.
Yes, we did.
With Lindsay about how Jersey City has completely changed, and it has. I came from New York to Jersey, from New York City to Queens to Manhattan to Jersey City. So that's kind of like my little trajectory. Long Island City, and then Astoria, and then Manhattan. But anyway, those are a couple of heavy hitters for food, right? Long Island City, Astoria.
Huge heavy hitters for food.
Yep, the Greek food in Astoria is amazing.
It's amazing. Yeah,
Thai food in there, oh my God, ridiculous.
Yeah, definitely.
So now I'm in Jersey City, and I've seen it change in the last 20 years. And everybody talks about Raza, which Pete Wells of the New York Times famously said in his article is the best pizza in New York, actually in New Jersey. That's the title of his article. He said that.
He said that.
He did.
That's a strong
Raza's
statement.
amazing. Yep.
Okay.
Raza's amazing. I also love Domo Domo, which is
Domo
Domo is a Japanese restaurant that transplanted from Manhattan to Jersey City. So that's a really good restaurant. Those are 2 of the really, really good ones, and you can't go wrong with those. So I would go to one of those 2.
Yeah, Jersey City, I try to go there at least 3 times a quarter because it's not just eating, right? It's the ambiance, it's the walk, it's enjoying the cultures, the different historical sections of Jersey City, right?
And it's a very diverse city.
It is, yeah. So
Which, I have 2 kids, and I think I'm doing something right when my kids say to me, they go someplace. My son is in college now. He's at Boston University. And, when he was growing up, he was always mentioning that, he always felt so at home in Jersey City as he got older because it was so diverse and it just felt more at home for him. Like he felt more comfortable rather than being in parts of the country or parts of, we go on vacation to Florida where I'm from originally, and it isn't as diverse. And so he would point that out, which I think is a lovely thing. I think it's really important to, be in an environment where your family can feel comfortable.
Right.
And that you are, you used to feel at home. Yeah, you can make yourself a little nest and bring in the elements of your atmosphere that is important to you.
Yeah. Fun fact, my oldest is going to be at Boston University for postgrad.
Oh, you're kidding me!
Yeah,
they have to hang out. They have to hang out.
So we're looking for apartments next year.
Nice.
In Boston. So
good for her.
We'll see what that criminal justice world looks like.
I love it. That's good for her. That's a good city. Do you go there a lot?
I used to go there a lot. I used to work for State Street, so I used to travel back and forth from New York back to Boston. So I know Boston very well.
It's not a bad drive.
I took the we're flying.
Oh, you're flying.
Yeah, we ain't driving.
We drive.
No, 995. No, absolutely. Up and away, or train to Cellar. So one of those
so
2 transportation.
Yeah, you get a lot more done. You get a lot more done.
95 traffic is not a joke.
Yeah. There's some good food in Boston too.
Yeah, very good. North End.
There's for the Italian food.
Italian food.
The Chinatown in Boston. There's a restaurant there called Peach Farm. You should try it.
I gotta try that now. Peach
Farm in Boston.
Okay.
Yes.
Well, Paula, thank you so much for coming on. Let's talk about it. I greatly appreciate your presence. There's so much that you and I can talk about, but there's only so much time.
I know we could do so much on insurance and whatever else. We used to, if anybody watches this show and they can find some of the other ones that we used to do, those were fun, right? We had a good time. We had a really good time on our shows.
So that's the reason it encouraged me today to do this on a little upscale level to bring
light, shine
light on us, right?
Shine the light on insurance and mortgages for sure. Well, thank you.
Right,
thank you for inviting me.
Likewise.